Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session. In today's session, we are going to discuss a very important direction that the Reserve Bank of India has recently released. So we are going to discuss the Reserve Bank of India's lending directions for the loans against the gold and silver security or against the gold and silver collateral. Okay, so all of these different and difficult terminologies we are going to discuss in today's session, but let me tell you that these are very important directions that the RBI has released, as this is very important from the objective and descriptive point of view. There are a lot of data points that you must be aware about from these news articles, from this direction that the RBI has released. Okay, so this is a very important direction that the RBI has released. Now give me a thumbs up if I am clearly audible and visible to all of you. And again, these directions, they are very important from the RBI examination, from the RBI Grade B and Grade A examination perspective. Okay, and we will discuss the directions in length in today's session. So before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. So let's start with today's session. Good morning everyone and welcome to the session. So starting with the Reserve Bank of India lending against gold and silver collateral directions 2025. So RBI has released these directions in June 2025, that is recently, in its RBI notification. Okay, now before understanding with the directions, before understanding these recent directions, let's see the background. Then we will be able to understand that why these directions have been released. Okay, so first of all, in the background, RBI had restricted the lending against primary gold. So primary gold, that means the gold bullions we can say. Okay, so RBI has restricted previously the lending against the collateral of the gold bullion. First of all, what is collateral? I hope all of you know about the collateral. See, the collateral, this is, let's say you want to take a loan from a bank. So if you want to take a loan from the bank, you have to give collateral to the bank. Collateral is the security that you are pledging, or this is the asset. This is the asset that you are pledging with the bank that gives some security to the bank, right? So you are keeping समथिंग एज कोलेट्रल. आप कुछ गिरवी रख रहे हो, आप अपना घर या अपने गहने या फिर अपना कार गिरवी रख रहे हो, उसके अगेंस्ट यू आर गेटिंग द लोन, राइट? सो कोलेट्रल इज द असेट दैट यू आर प्लेजिंग to get the loan from the bank. That is the collateral. So whenever I say collateral, you have to always understand that this is some asset that you are pledging to get the loan. Now collateral can be in the form of your house if you are taking the house loan. It can be in the form of land. It can be in the form of your car if you are taking car loan. It can be in the form of your jewelry, the gold ornaments and such. Okay, so this is the idea. I hope collateral is clear. So RBI has restricted the lending against the primary gold collateral. That means RBI has said that the banks, they are not allowed, the regulated entities, they are not allowed to lend against the gold bullion. Okay, against these bullions, because these bullions, they do not serve any productive purpose in the country. If you are buying the jewelry, at least it has some value for you. Okay, you are using it. If you are buying some ornaments for the like for temples and such, or for some religious purposes, at least it has religious and cultural value. But if you are buying gold bullion, it is just for speculative purposes. It is just for non-productive. So this is the non-productive nature of gold, and the RBI has said that regulated entities, they are not allowed to lend against the gold bullions. That means they are not allowed to lend against the primary gold. So primary gold and primary silver, they mean any form of gold that is not jewelry, ornaments and coins. So primary gold and primary silver mean gold and silver in any form other than jewelry, ornaments and coins. That is majorly the gold bullions. So RBI has restricted lending against the primary gold because the primary gold is of the speculative and non-productive nature. Okay, next is regulated entities, the banks, NBFCs, urban cooperative banks and such, they have been permitted to lend against the collateral security, against the collateral of the gold jewelry, gold ornaments and the coins. Okay, so that means the gold jewelry, the ornaments and coins, this can be kept as collateral to get the loans. You can keep your gold jewelry, gold ornaments and the gold coins as collateral to get the loan for meeting your short-term financing needs of borrowers. So we have seen a lot of in the movies also that the lady is keeping her jewelry as collateral. The lady apni jewelry girvi rakh rahi hai to take the loan to help the family. Okay, so this is the same kind of idea that you can keep your jewelry, ornaments and coins as girvi, as collateral to get the short-term loans. Okay. Prudential. Now previously, so this is the background. So previously there were the different norms that were released, different regulations that were released. Okay, prudential and conduct related regulations were released for such kind of loans that were taken against the collateral of the gold, jewelry, ornaments and coins. So at different point of time, for different regulated entities, there were different regulations that were released by the Reserve Bank of India for such kind of loans. Now the regulations, they vary, they differ in certain aspect due to the difference in the regulated entities. Now NBFCs, they have different criteria. The banks, the scheduled commercial banks, they have different criteria. The urban cooperative banks, they have different criteria because they have different capabilities also. So there were different regulations that were released for these different entities. So the regulations, they vary, they differ in certain aspect for the different regulated entities because they have different risk-taking capabilities also. Okay, so the existing regulations that were available or that are still available before these directions. So the existing regulations are guided by the objective of providing the loans to the borrowers, the short-term loan requirement of the borrowers, and whilst simultaneously addressing the risk for the lenders. So the existing regulations, they are framed with the objective to provide the borrowers the money during their liquidity crunch and to help the lenders address the risk. Okay, similar concerns and objectives guide a few regulations issued by the Reserve Bank of India for the loans against the collateral of the silver, jewelry, silver ornaments and coins also. So this is the basic idea, this is the background. Now you have seen the background that okay, there were certain directions that were available for the loans against the collateral of the gold jewelry, against the silver jewelry, but for different regulated entities there were different regulations, or the regulations differ for the different regulated entities. Now the Reserve Bank of India has said that as a part of moving towards a more principle based framework, more principle-based framework means that the framework that is based on the instructions that are based on general principles or core values rather than strict detailed rules or procedures. So we are moving towards more principle-based framework that will provide the overall core value, that will provide the overall instructions to the regulated entities that how they should be providing the loans against the collateral of gold and silver. So we will not be very strict. The RBI is not being very strict. The RBI is not giving the detailed rules and procedures. RBI is giving just the overall idea to the banks. Okay, and harmonized regulatory framework. So in the previous slide we have discussed that there are different regulations for the different regulated entities. Now the RBI has said that we want to have the harmonized regulations for all the regulated entities so that they follow the same nature of regulations. Okay, so as a part of moving towards more principle based and harmonized regulatory framework and addressing possible prudential and conduct related gaps that are happening, let's say the bank is taking the loan, the bank is taking the collateral and is giving the loan, but there is some problem in the collateral, there is some problem in the gold and silver jewelry, or that is fake, or let's say the bank is not able to handle the collateral very well. So there are some gaps that were available previously, so that are also addressed in these directions. Okay, so addressing possible prudential and conduct related gaps across the regulated entities, the revised instructions have been released and there is comprehensive directions that have been released. Okay, so this is the idea. So regulatory objective behind the revised directions. So what is the objective behind releasing these directions? So the objective is to put in place harmonized regulatory framework so that all the regulated entities, they follow the same structure, they follow the same core values, they follow the same general principles. Okay, address the concerns observed relating to some of the lending practices which were not good or which were not very prudent. So that has to be addressed, as well as necessary clarity is going to be provided on certain aspect that you are going to see that various data points have also been released. Strengthen the conduct related aspect so that the conduct of the banks is good and they are following the prudent norms. So that's why the new directions or the revised directions have been released, and now this is the Reserve Bank of India lending against gold and silver collateral directions 2025. I hope the overall idea is clear. Now we are going to start with the new directions that the RBI has released after understanding the basic background, okay, and the basic terminologies. So now the power that RBI has got through the Banking Regulation Act, through the Reserve Bank of India Act, and through the National Housing Bank Act. So through the different powers that the RBI has got, RBI has released these directions. Now these directions has to be followed by all the regulated entities that we are going to discuss about. So these regulated entities have to follow the directions, the new directions, as soon as possible, but no later than April 1, 2026. So as soon as possible, the directions has to be followed, but not later than April 1, 2026. Till the new directions are being followed by the regulated entities, till the new directions are adopted by the regulated entity, they shall continue to be governed. So the earlier loans, let's say the new directions are adopted by January 2026. So till then, whatever loans that have been given by the regulated entity, that loans will be governed by the previous directions, okay. So this is the idea. So all the regulated entities should start following the directions as soon as possible, but not later than April 1, 2026, and till the new directions have been followed by the regulated entity, till the new directions are adopted, till then whichever loans have already been given, so that can follow the previous guidelines. This is the basic idea. Now the scope, that means which regulated entities are under the scope of this direction, applicability basically. So all the loans that are offered by an regulated entity where eligible gold or silver collateral is accepted as a collateral security. So these directions are for all the regulated entities that are offering the loan, that are providing the loan against the collateral security of the gold and silver collateral, okay. Now all the regulated entities that are the commercial banks, small finance banks, local area banks, regional rural banks, excluding the payment bank cannot lend, and that's why these directions are not applicable on the payment bank. Now all the primary urban cooperative banks and the other urban cooperative banks, they also have to follow the directions. All the non-banking financial companies, including the housing finance companies, they also have to follow the directions. So this is the applicability, only excluding the payment bank. All the other regulated entities will follow these directions, okay. Now before moving forward, you have to understand certain terminologies like the loan to value ratio and the bullet repayment loans. So loan to value ratio, basically loan to value ratio, this is the ratio, or if we want to take it in percentage terms, so this is the outstanding loan divided by the collateral value. Let's say you are giving the collateral, your gold jewelry you are giving, that is worth 1 lakh rupees. So the collateral value, the asset value, that is the value of your jewelry, is 1 lakh rupees. Against that collateral value, let's say you are getting the loan, of 90,000. You are getting the loan of 90,000. So this multiplied by 100, so 90% is the loan to value ratio. The loan to value ratio is 90%. Loan to value ratio, in the percentage terms, it is taken as outstanding loan divided by the collateral value multiplied by 100. Okay, so loan to value ratio shows that against your collateral value, how much loan you can get. Okay, against your collateral value, how much loan you can get. So loan to value ratio on a day. Now, if you want to see the loan to value ratio on any day, it means the ratio of the outstanding loan to the value of the pledged eligible collateral. That is, eligible collateral in this case always will be the gold and silver collateral, because this direction is particularly for the gold and silver collateral. Okay, so outstanding loan, whatever loan is outstanding divided by the pledged eligible collateral. Okay, so this is loan to value ratio. Now bullet repayment loans. Bullet repayment loans, let's say you have taken the loan, that is, you have taken the loan of 90,000 against your collateral value of 1 lakh. You have taken the loan for 6 months. Now on this loan, there is some interest rate that is charged. Let's say interest rate is, in total the interest rate is 9,000. Now this loan plus the interest rate you have to pay at the end of the loan. That means on the maturity day, you have to pay the payment. Okay, so that is the bullet repayment loan. That is at the end of the loan period, you have to pay the principal amount and the interest amount together on a single day. So in case of bullet repayment loans, however, bullet repayment loans, first of all, these are the loans where both the principal and the interest are due for payment at the maturity of the loan. So for 6 months, if the loan is for 6 months, you will not have to make any payment, you will not have to give any EMI, but at the end of this 6 month, you have to pay the complete principal amount and the interest amount at one go. Okay, this is the bullet repayment loan. So in case of bullet repayment loans, however, the LTV calculation shall take into account the total amount repayable at maturity. So in case of bullet repayment loan, the collateral value is 1 lakh. So the loan amount will also include the interest, because in the bullet repayment loan, only one time the payment is happening, so it is more risky, right? So that's why it is said that for the bullet repayment loan, the LTV should include the principal amount and the interest amount, that is the total amount that will be paid at the maturity. For all the other kind of loans, that is in which EMI are paid on the regular basis, the loan to value ratio is the outstanding loan divided by the collateral value. But in case of the bullet repayment loan, in which case only one time the payment is happening, so loan to value ratio is the loan plus the interest divided by the collateral value. So here the 90,000 will include the loan plus the interest amount. So loan will be given, let's say 81,000 of the loan is given and 9,000 let's say is the interest rate. So this will be, the LTV will be 90%, which will include loan plus interest rate. Any confusion in this? Any confusion, anyone? Should I move forward? So bullet repayment loan, I hope this is clear. All these terms will be repeated again and again. That's why I am making it very clear here only. Shall we move forward now? Any confusion, anyone? Repayment date will be the maturity date, or the maturity of the loan. Okay. Let's move forward. A lender. Now restrictions and ceilings that are mentioned in the new directions. In the new directions of 2025, there are certain restrictions and ceilings. A lender shall not grant any advance or loan. That means a lender, a bank, a NBFC cannot provide any loan against the primary gold or primary silver. So against the gold bullions or against the silver bullions, the loans cannot be given. As well as the loans cannot be given against the financial assets that are backed by primary gold or primary silver, that are backed by the gold bullion, silver bullion and such. Okay, such as the ETFs and against the mutual funds that are backed by the primary gold or primary silver, against that the loan cannot be given by the regulated entities. So regulated entities cannot give loan against the primary gold or primary silver in any way. A lender shall not extend a loan where ownership of the collateral is doubtful, where you are not sure that who actually owns the gold or silver jewelry or the ornament. A suitable document or declaration has to be obtained from the borrower in all cases to the effect that the borrower is the rightful owner of the eligible collateral and there is no confusion in the ownership. Next is multiple or frequent sanction of loans against eligible collateral to the same borrower. Let's say that you have, let's say XYZ person has 1 kg of gold. That means 1000 grams of gold. Now the person is giving 10 grams of gold and is taking the loan worth 90,000. The person is again and again giving 10 grams of gold and is taking the loan of 90,000. You can understand that in this way, see, for the small loans, there is less scrutiny that happens. There is less documentation that is asked. There is less processes that are followed. So this person, by taking the multiple small loans, the person is trying to go through easier processes so that the person is not coming under the radar of the bank. Because the person, let's say if the person has taken, in total the person has taken 10 lakh rupees, but in the way of 90,000. So the bank is not like at different point of time the loans are taken. So the bank doesn't know that the person has taken such high loan. So in the smaller loans, less scrutiny has happened. Later on, it is identified that the person has done money laundering through this process. So see, when multiple small loans are taken by a single entity, by a single individual, so it might be to to not go through the scrutiny and to not go through the stricter processes, because then it might be identified that the person is doing the money laundering or something. Okay, so multiple or frequent sanction of loans against the eligible collateral, against the gold and silver collateral to the same borrower, aggregating to a value that is in excess of a threshold to be decided by the lender, must be examined closely as part of the transaction monitoring under the anti-money laundering framework. So that means if an individual or if a single borrower, a single entity is taking multiple or frequent section of the loans, frequently the person is taking the loans, so it against the eligible collateral, the gold and silver we are talking about here. So it has to be seen that once the loan reaches a threshold, let's say once a loan reaches 5 lakh rupees, then the scrutiny has to happen that the person has done some money laundering or the person is engaged in some speculative things or not. Okay, so this is the idea. Next is, a lender shall not avail loans by repledging. So this is very important, that a lender shall not, let's say you have gone to a bank, let's say you have gone to a bank, you have given your gold and silver jewelry as collateral and you have taken the loan. Now how will you feel if the bank further keeps your gold and silver, the bank keeps the gold and silver as collateral with the other bank and takes the loan from the other bank? So that means your gold and silver jewelry is traveling around the country. So that should not happen now, because you have kept the collateral with this bank, trusting this bank. So it is said that a lender shall not avail loans, shall not take loans by repledging the gold or silver collateral that is pledged to it by its borrowers. That means the gold and silver jewelry or ornaments or coins cannot be used by the bank or the lender to take further loans. Okay. Now the lender shall not extend loans to other lenders, or the bank or the NBFC cannot provide loan to other banks or NBFCs, entities or individuals by accepting the gold that is kept as collateral with them. That means, let's say this bank should not provide loan to a bank that is using its gold and silver jewelry as collateral, that has been taken from a borrower as collateral. So that means the collateral should, basically the idea is that the collateral should not be used again, or there should not be double counting of collateral. That should not happen, because if double counting of collateral is happening, that can create the problems in the later on phase. So the lender shall not take loans against the collateral that is pledged with the lender, or the lender shall not provide any loans to any entity, individual or the lender by accepting the gold that is pledged with the lender. So that should not happen. Basically, the double counting of collateral shall not happen. The collateral should not be used again. Tenure of the consumption loan. So tenure of the consumption loans in the nature of bullet repayment loans shall be capped at 12 months. So if we are talking about the bullet repayment loans that will be repaid at one time only, or in one installment, directly the repayment of the loan is going to happen. So in the case of bullet repayment loan, the consumption loan should not exceed the time period of 12 months. This is the basic idea. Okay. Next is, loans against ornaments and coins shall be subject to the following. That is, the aggregate weight of the ornaments, the total weight of the ornaments pledged for all loans to a borrower shall not exceed 1 kilogram for gold ornaments and 10 kilograms for silver ornaments. Very important, a direct question can come from this. Okay. The aggregate weight of the coins pledged for all loans to a borrower shall not exceed 50 grams in case of gold and 500 grams in case of silver coins. So there is the restriction on how much collateral you can pledge in the form of ornaments and coins. Okay. So this is the idea, very important points. Next is the credit policy of a lender. See, the lender has been given the full freedom to create its own credit policy, loan policy. So lender, that is the banks and NBFCs, they can create their own credit policy that includes that how much single borrower limit they want to have. To a single borrower, what should be the limit of loan, to a aggregate limit, That means if there is a group of entities, so what should be the aggregate limit of loan that should be given to the borrowers, okay, against the eligible collateral of gold and silver. Maximum loan to value ratio permissible for such loans. Action to be taken if the loan to value ratio is breached. Valuation standards and norms that they have to follow, that how they will value the valuation standards and norms, that how they are going to value the gold, okay. Though the RBI has given certain basic norms that we will see, but valuation standards and norms can be decided by the bank itself or NBFC itself. Standards of purity, criteria for employing the gold and silver assayer, because if you are taking the gold and silver as collateral, how do you know that that collateral is pure, or how do you know that the gold and silver is actual, it is not fake? So you need to have the valuer, gold valuer or gold assayer. So how do you how a bank, what is the criteria that how the bank is going to hire the assayer, what will be the qualifications for the assayer or the valuer of the gold and silver? So that criteria has to be set by the bank itself. The auction procedure, if the loan is not coming back, so how the gold and silver collateral will be auctioned, so that procedure has to be laid down. Appropriate documentation that has to be taken in case the loan is categorized under the PSL. So this is the basic idea, okay. Valuation standards and norms, this is in case of the loan to value ratio, that how the loan will be valued against the collateral value, okay. So how the loan will be valued against the collateral value, that is the valuation standards and norms have to be laid down. A lender may decide on a suitable approach for lending against eligible collateral. So the lender, that is the bank or the NBFC, has the authority to decide the suitable approach for lending against the eligible collateral of gold or silver as part of the credit risk management framework. But it has to be followed that there is the principle of proportionality that is followed. What is the principle of proportionality? See, the principle of proportionality says that the smaller loans should follow simpler processes and the larger loans should follow stricter processes, or there should be stricter norms for the larger loans, okay, because large loan is taken if the person default, so there will be large loss that the bank will be facing, okay. So for smaller loans, simpler processes; for larger loans, stricter processes, stricter norms has to be followed. So this is the principle of proportionality. So the RBI has said that the lender has the choice to decide the suitable approach for lending against the silver and gold collateral, but basically the lender should be following the principle of proportionality. For the small loans, there should be simpler processes that should be followed, and ease of access for the small ticket loans, there should be ease of access, simpler processes, ease of access for the small ticket loans. However, detailed credit assessment needs to happen in case the loan is above 2.5 lakh to a borrower against the collateral of gold and silver. So basically, detailed credit assessment should happen of the borrower's repayment capacity, and about the borrower, detailed credit assessment should happen in case the loan is above 2.5 lakh to a borrower against the eligible collateral. So remember this data point again. A lender may renew an existing loan. That means the borrower can ask the bank to renew the existing loan. Let's say the borrower has taken the loan of 2 lakhs. Now the borrower wants to extend the timeline to repay the loan. So the bank can do so, okay. The lender can renew the loan for a borrower, as well as the lender can provide the top-up loan to the borrower. Top-up loan means additional loan. Let's say the borrower has taken the loan of 2 lakh rupees. Now the borrower requires additional loan of 20,000 rupees. Okay, so this can be done. Let me give you an example. Let's say the LTV ratio is 90%. Okay, for the farm credit, for the agriculture credit, the farmer is taking the credit, okay, by giving its gold jewelry as collateral. So here in this case, the gold jewelry is worth 1 lakh rupees. The collateral value, that is the gold jewelry, it is worth 1 lakh rupees. Against this collateral value, 90%, that means 90,000 is given to the farmer, okay, for let's say a period of 3 months. Let's say the farmer has returned 40,000 rupees. The farmer has returned the 40,000 rupees through the installments, but after 1 month, the farmer has realized that I want further loan. For my farming activity, I want further loan. So now the farmer, first of all, farmer is left with 50,000 rupees. This is the outstanding loan. This is the outstanding loan. Now the LTV will be counted again. If the farmer is saying that I want more loan, I have repaid 40,000, I want more loan of 20,000. So first of all, it will be seen that what is the LTV ratio, so that the LTV ratio do not cross 90%. So currently outstanding loan is 50,000 against the collateral value of 1 lakh rupees. So LTV ratio is 50, like here 50% only. So bank has the leverage or bank has the space to give more loan to the farm or to the farmer. Okay. So 20,000 top up loan will be given to the farmer. This is the idea. So here the lender may renew an existing loan. That means for the existing loan, timeline may be extended or provide a top-up loan, additional loan can be provided. Sorry. A top-up loan can be provided upon a formal request from the borrower subject to a credit assessment in accordance with the above rules. Such renewal or top-up shall be permitted only within the permissible LTV. So LTV, if it is decided that for the farm credit 90% is the LTV, or let's say 95% is the LTV, that LTV should not cross. Okay. So LTV has to be calculated whenever the top-up loan is given. LTV has to be again calculated. Okay. Or whenever the renewal has to happen, the LTV has to be calculated again. Okay. Is this process clear? And provided the loan is classified as standard, that means regular EMIs have been paid, regular payments have been made. Okay. Is this point clear? Should I move forward? Is there any confusion? So top-up loan means any additional loan sanctioned over and above outstanding loan during the tenure of the original loan. So during the tenure of the original loan, so tenure of the original loan was 3 months. After 1 month, the farmer wanted 20,000 extra. So farmer said that, okay, I have repaid some of the loan, so give me some extra top-up loan. So that can be given within the LTV of 90%. Okay. So this is the basic idea. Clear? Okay. Ma'am, but okay, next is further renewal of bullet repayment loan. Now, in the case of bullet repayment loan, because in the case of bullet repayment loan, the payment is made at one time only. So in this case, if the renewal has to happen, that means extension has to happen of the bullet repayment loan, this shall be allowed only after payment of interest has been done. That means at least interest has been paid. Okay, then the extension of the loan can happen. That means, let's say the farmer has taken the bullet repayment loan. The farmer has taken the bullet repayment loan of 90,000. So once the interest has been paid, let's say 9,000 of the interest has been paid, then the farmer can say that I want to extend my timeline, and rather than 3 months, I want 6 months to pay this loan. Okay, so I want 3 months more, basically. This is the idea. That means at least in the bullet repayment loan, at least the whole of the accrued interest has to be paid to get the renewal. The lender shall ensure that such renewals and top-ups are clearly identifiable in its core banking system or loan processing system. That means if the top-up or renewal is happening, that has to be mentioned clearly so that the RBI is aware about it. Okay. Ma'am, but loan plus interest will be on interest too. What is the meaning? Sorry, Avi, kindly reframe your question so that I can understand it, and then I will explain if there is the confusion. Okay. So now valuation and assaying of gold and silver collateral. So how the valuation happens, how the like in case the valuation is happening of the gold and silver collateral, so how this like valuation happens, how the price is determined for the gold and silver. Let's say some person, let's say I am going to the bank taking my jewelry, that okay, I want loan. So how the bank is going to identify that what is the worth of the gold jewelry or what is the worth of the silver jewelry. So gold or silver accepted as collateral shall be valued based on the reference price corresponding to its actual purity. That means the value of the gold should be based on some reference price. For this purpose, the lower of these two can be chosen by the bank. Okay. The average closing price for gold or silver of that specific purity, let's say the purity is 22 carats or the purity is, let's say, 24 carats. So whatever is the purity, the average closing price for gold or silver of that specific purity over the preceding 30 days. So over the previous 30 days, whatever the price has been, the average will be taken, and on that basis, the valuation of the gold or silver jewelry will happen, or the collateral will happen, or the closing price for gold or silver, as the case may be, of that specific purity on the preceding day, on just the preceding day, as published either by the India Bullion and Jewellers Association Limited or by a commodity exchange regulated by the Securities and Exchange Board of India. Okay, so for this purpose of valuing the gold and silver collateral, for this purpose, lower of these two has to be taken by the bank. That is, whichever value is lower, that can be taken by the bank. Now in the valuation, when the valuation is happening, the bank also sees that okay, there are some stones on that jewelry. So the stone value has to be deducted. If there is some problem in the gold, if it is like broken down, or there is some like laख hota hai na gold mein, so there is some like filling has happened of some other material, so that has to be deducted. Okay, so all of these deductions will be made, and after that the valuation will happen of the actual gold and silver value. Okay, so the valuation process will be followed by the bank as per the requirement, as per the process that the bank has determined, but the gold price will be on this basis. Okay, so as I have told you that the valuation standards and norms will be decided by the bank, because they have to do some deductions also for the stones, for the breakage that has happened, or for the like lace that is in the gold jewelry, or for the laख, or for the stones, the deductions has to happen. So valuation standards and norms is as per the bank, but the gold price and value price will be on the basis of the reference of this. Now if price information for the specific purity is not directly available, let's say the gold is of 22.5 carat. Now for this particular specific purity, the price is not directly available, or the reference is not directly available, so the lender can use the published price available for the nearest available purity, maybe 22 carats price can be used, and proportionately adjust the weight of the collateral. So that can happen. Okay, for the purpose of valuation, only the intrinsic value of the gold or silver contained in the eligible collateral shall be reckoned. That means the stones have to be deducted, any other value of the other material that is present in the gold, so that has to be deducted. Only the pure gold and silver can be kept as collateral, not these stones or laख and such. Okay, so for the purpose of valuation, the intrinsic value of the gold or silver contained in the eligible collateral shall be reckoned, and no other cost element such as precious stones or gems shall be added. That should not be added. And for the valuation, the bank will decide that how these deductions need to happen. Okay, yes, of course, if the interest rate is 10%, if the interest rate is 10% that is charged on this loan, so that same interest rate will be charged on this also. No, the bank is not giving money for free. The bank will never give it on free, right? So this is the idea. Now coming to the next part. See, before understanding the consumption loans, understand the income generating loan. So these are the definitions that are given in the directions itself. Okay, so income generating loan means loans extended for the purpose of productive economic activities. So income generating loans are the farm credit, the loans given to the businesses or for the commercial purposes, or the loans that are given to the small vendors, the small artisans, the loans that are given to the small enterprises, loans for creation or acquisition of productive assets. So this is the income generating loans. The consumption loans are anything other than this. Okay, the consumption loan are all the other loans other than the income generating loans. Okay, income generating loans are the loans that are for the productive activities, the loans for the farm activity, for the small vendors, for the small businesses and such and such. Okay, so maximum. Now for the consumption loans, for the income generating loans, it is upon the lenders that they decide the LTV. But for the consumption loan, the LTV is decided by the Reserve Bank of India, or it has been notified by the Reserve Bank of India. So the minimum can be decided by the bank, or the LTV can be decided by the bank for the consumption loans, but the maximum has been determined by the RBI. Okay, so maximum LTV ratio in respect of consumption loans against the eligible collateral of gold and silver shall not exceed the LTV ratios as given by the Reserve Bank of India. So minimum or lower than these LTVs can be decided by the bank, but not more than this. Okay, so total consumption loan amount per borrower, if it is less than 2.5 lakh or equal to 2.5 lakh, so the maximum LTV can be 85%. If the loan is more than 2.5 lakh but less than or equal to 5 lakh, then the LTV cannot be more than 80%. If the consumption loan is more than 5 lakh, but so more than 5 lakh consumption loan, in this case maximum LTV can be 75%. Now for the income generating loan, the LTV will be decided by the bank, and for the consumption loans, the LTV will be decided by the banks. But in the case of consumption loan, the maximum LTV has been given by the RBI. Okay, this is the idea. Next is release of collateral after repayment. So after the repayment has happened, let's say I have repaid the loan. So my collateral or my gold jewelry, my silver jewelry should come back to me, right? So a lender shall release or return the pledged eligible collateral, the gold or silver collateral held as security on the same day that the repayment has happened, but in any case not exceeding a maximum period of 7 working days upon full repayment or settlement of the loan. At the time of release of the pledged eligible collateral, when the eligible collateral is released, that means the jewelry is coming back to me. In this case, it has to be verified that this is the same jewelry that was given by me. It is of same purity, it is of same weight. So as per the details in the certificate to the borrower's satisfaction. That means, see, whenever you are giving your jewelry as collateral, or whenever you are giving your ornament or coin as collateral, during the sanctioning of the loan, the collateral is checked. The assayer or the valuer, the assayer of the bank or the valuer of the bank checks the collateral, values the collateral. At that time, a certificate is released that has the gross weight of the jewelry, the net weight of the jewelry. Net weight is always after deducting the stones and gems and such. Okay, the purity of the jewelry and such detail, the deductions that has been made. So all of this is written down in the certificate. So during the sanctioning of the loan, now when you are getting back your jewelry, when you have done the repayment, you are getting back your jewelry, then also the certificate is checked that as per the certificate, the jewelry that you are getting is correct or not. Okay, so this is verified for the correctness. Next is compensation. Let's say within 7 days you are not getting your jewelry back, you are not getting your collateral back or your product back, asset back. So in this case, in case of delay in release of the pledged collateral, in the case that it is your asset is not coming in the within the 7 working days after the full repayment, so in this case on per day basis you will be eligible to get rupees 5,000 per day for the delay beyond the timeline that has been prescribed. So if you are not getting back your asset within maximum 7 working days, so after that on each day basis the borrower will be getting rupees 5,000. Okay, so this is the idea, this is the compensation. Next, transparency in auction process. Let's say that I was not able to repay the loan and that's why my jewelry is getting auctioned, because the bank has to take the money, right? So bank is auctioning my jewelry. So first of all, adequate notice to the borrower has to be given through the email, through the SMS, communication has to be made that your jewelry is going for the auction. If you have the money, repay the loan, otherwise we will auction your jewelry. So to repay or settle the loan, the adequate notice has to be sent to the borrower or the legal heirs of the borrower. In case the email ID is not valid, in case the mobile number is not going through, so public notice has to be printed. A public notice has to be released by the bank that we are auctioning this particular jewelry. This is the photo and so and so, and a period of 1 month has lapsed from the date of public notice, but still the borrower has not repaid the loan. In this case, the auction can happen. So before the auction, basically inform the borrower that either repay the loan or we will auction your jewelry. In case you are not able to connect to the borrower, so release a public notice and wait for 1 month. Okay. Next is announcement of the auction to the public by issue of advertisements at least in 2 newspapers, one in the regional language and one in the national daily. Okay. Next is a lender shall declare a reserve price of the gold and silver collateral on the basis of the value of the gold and silver, on the basis of the reference price. So which shall not be less than 90% of its current value. Let's say on the basis of the reference price, that is the reference price based on previous 30 days or previous day and such. So on the basis of the reference price, the gold jewelry, let's say I have given my gold jewelry as collateral. So reference price of the gold jewelry has to be calculated, and at least 90% of the reference price, let's say reference price is 2 lakh rupees, so 90%, or let's say reference price is 1 lakh rupees, so 90,000. This much should be asked in the auction. If let's say in the first auction the jewelry is not able to sell at 90,000, so in the second auction 85% of the reference price has to be asked. That means 85,000 for the reference price of 1,85,000 has to be asked in the second auction. This is the basic idea. So a lender shall declare a reserve price for the gold and silver collateral at the time of auction, which shall not be less than 90% of its current value. And in case the auction has failed twice, so sorry, if the auction has failed twice and 90% is not coming, so in this case a reserve price not less than 85% has to be announced for the third auction. This is the idea. The lender or its related parties shall not participate in the auction basically, and any surplus, let's say the jewelry, when I gave the collateral 6 months back, so 6 months back when I gave the collateral, the jewelry was worth 50,000 only. Now when the auction is happening, the jewelry is worth 80,000. Okay, now after deducting, let's say the loan that I have taken is only 40,000 and adding the interest of 10,000, the bank needs to get 50,000. So the bank is getting 80,000 through the auction. So that means bank is getting 30,000 extra. So this is a profit, right? But this is not a profit for the bank. The bank has to return the extra amount to the borrower. So this is the case. So after taking, so basically after the auction, the lender shall mandatorily provide full details of the value that has been gained from the auction and the dues adjusted to the borrower. Let's say the value that has come from the auction is 80,000 and the dues were only after deducting the principal amount, after deducting the interest amount, so the dues were 60,000. So the surplus is of 20,000. So the jewelry is actually of the person now. So surplus should go to the person. So surplus has to be transferred to the refunded to the borrower or the legal heirs within a maximum period of 7 working days. Okay. The next point is, so we are towards the end of the session. So pledged gold or silver collateral lying with the lender beyond 2 years. Let's say that for 2 years, no one has gone to the bank to take back the collateral. So in case the full repayment, I have done the full repayment, I have done the settlement of loan, but I have not gone to the bank to take back my gold or silver jewelry. And what has happened that my phone number has changed, my email ID has changed and something, and the bank is not able to contact me also. So the pledged gold or silver collateral lying with the lender beyond 2 years from the date of full repayment or settlement of loan shall be treated as unclaimed. A lender shall periodically undertake special drives to ascertain the whereabouts of the borrowers so that the collateral can be returned. Okay. A report on unclaimed gold and silver collateral shall be put up to the customer service committee or the board. The information has to be sent to the board as the case may be at half-yearly intervals for a review. Okay. Next is additional points. So there are certain additional points. Now there are very much theoretical points that were there. So I've just brought the important ones. So these additional points are there. Okay. A lender shall ensure that a standardized procedure is put in place to assay the purity of the gold and silver collateral, its weight, etc. The net weight, the gross weight. The gross weight is the total weight of the jewelry. The net weight is after deducting the stones and the gems and such. Okay. This procedure shall be adopted uniformly across all the branches of the bank. If the bank has decided a procedure, the valuation process, so that has to be followed across all the branches without any deviation. A lender shall display on its website the methodology that is adopted to determine the net weight of the gold and silver. Because see, after deducting the deductions that is done for the stone, for the gems and such, so the deductions might be different in different banks, that how they do the deductions. Okay, so that particular norm that a bank follows, that has to be notified in the website. A lender shall ensure presence of the borrower while assaying the collateral at the time of the sanctioning the loan, and the reference price is as decided by the Reserve Bank of India. That is, the reference price is on the basis of the norms that the RBI has given, right? So the RBI has given the norms on the reference price. So reference price should be on this basis, right? The reference price is on this basis, but the valuation that is happening after deducting the stones and after deducting the gems and such, so valuation process might differ. So a lender shall ensure the presence of the borrower while assaying the collateral at the time of sanctioning the loan. The deductions relating to the stone weight, fastenings, etc. as part of the assaying procedure shall be explained to the borrower, and details has to be incorporated in the certificate during the sanctioning of the loan. So as I have told you that as the loan is sanctioned, a certificate is released, okay, that what is the purity of the gold, gross weight, net weight, deductions, and all these things are notified in the certificate, okay, the reference price that is taken and such. One copy of the certificate or e-certificate shall be kept as part of the loan documents, and the other certificate has to be given, other copy has to be given to the borrower under their acknowledgement. A lender shall ensure that necessary infrastructure and facilities, like the lender should have the safe vaults, otherwise where they are going to keep the gold and silver jewelry. Let's say that they do not have the necessary infrastructure, they do not have the safe vaults, so are they going to keep the jewelry just like that in their cupboards and something? So a lender shall ensure that they have the necessary infrastructure and facilities are put in place and appropriate security measures are taken while they are giving the gold loans and such. So when they have the security measures, when they have the necessary infrastructure, safety vaults and such, then only they can give the loans against such collateral, okay. A lender shall ensure that the gold and silver or the silver collateral is handled only in its own branch and only by its own employees, okay. Next is all communication with the borrower, especially the terms and conditions or other important communication, shall be in the language of the region or the language as specified by the borrower. For an illiterate borrower, important terms and conditions shall be explained in the presence of a witness, okay. Next is a clause. So this is the last point. A clause in the loan agreement shall be included for obtaining consent of the borrower. See, when for the first time when the assaying happens while sanctioning the loan, the borrower should be present. But when the verification happens during the internal audit, there are the internal audits that are conducted in a bank. So during the internal audit, the jewelry is again assayed, or there is the valuation of the jewelry that again happens, that is this jewelry real? The bank, has they done some khapla or something, or the bank has they there might be some overlook that they have done and they have not checked the jewelry very particularly or very properly, or the jeweler or the assayer was with the borrower, or it was in link with the borrower or something. So there is some problem might come in the jewelry. So internal audits keep on happening in the banks, okay. So a clause in the loan agreement shall be included for obtaining consent of the borrower to carry out surprise verification of the eligible collateral even in the absence of the borrower during the tenure of the loan. The verification can happen at any time, internal audit can happen at any time. So during the sanctioning of the loan, at that time borrower should be present during the assaying of the collateral, but during the internal audit the consent has already been taken that during the internal audit there is no requirement of the borrower, the verification can be done by the bank and at any time, okay. So this is the idea. Now, this is the directions. I hope all the points are clear. If there is any confusion, you can ask me. And this is the Perspective 360-degree session. And on Monday, Wednesday and Friday, the Perspective 360-degree session happens at 5 p.m. Now, on Friday, this Friday, we are thinking of taking a special session on the most important questions of the annual report. So, Jaskaran sir and I both are going to come for the most important descriptive questions on the annual report. Do you want such a session? We are thinking of taking it tomorrow at 5 p.m. So do tell me if you want such a session. And this is the first question. I hope you will be easily able to answer this question. Yes. So this is the first question. Try to answer this question. And this is the second question. Here you have to tell me the correct statements. Okay. So this is it. Thank you very much for joining the session, and let's meet tomorrow. We are thinking of taking the a complete session on the most important descriptive questions from the annual report. Okay, so do tell me if that is required. Thank you everyone. Thank you for joining, and see you in the next session. I hope you enjoyed this.